Hey everybody, Ken Heinz here, HFR President here with the HFR 500 January 2022 Performance Snapshot, the first video of the year. After a strong year for equities, crypto, and really bonds in 2021, January saw a reversal of all of those trends with sharp losses across equities. We saw fixed income yields rise and crypto on a two-month sell-off with significant declines across the board. This was a month when hedge funds in the HFR 500 clearly demonstrated some negatively correlated gains in some cases and capital preservation in others. As I mentioned in the previous slide, January performance was led by macro strategies. The HFR 500 macro index had an impressive gain of 1.33%. And this is a month when you saw the NASDAQ composite sharp decline of 9%, cryptocurrencies was off sharply, and interest rates rose significantly for the month. Along those lines, the HFR 500 relative value index was pretty much unchanged. We show a narrow decline of only 20 basis points for the month. The overall composite declined 1.7%, while the higher beta areas, the strongest performing last year, event-driven was down 2 2/3%, and equity hedge was down 4.2%. One of the things that's particularly interesting about the January performance for macro was that really all the different engines of macro seemed to be working at the same time, because you had strong gains across discretionary strategies, across systematic trend following quantitative strategies, and across currency and commodity strategies as well. And this really speaks to the uncorrelated and inflation protection qualities that macro has. Going a level deeper here, we see that the top areas of performance for the month include a significant gain in the HFR 500 macro commodity index. This was actually the strongest area of performance last year in 2021 and started off the year with a gain of 8 1/3%. That was also followed by asset-backed, RV asset-backed, which gained 1.7%, relative value fixed income, corporate, which gained 84 basis points, and HFR 500 macro multi-strategy, which includes commodity, discretionary, and systematic trend following managers, gained about 83 basis points. And you can see all of these negatively correlated, strongly negatively correlated with the sharp decline of the NASDAQ of almost 9% for the month. Taking a slightly longer view of time and really just adding the January of 2022 performance onto the full year 2021, we see what amounts to a 13-month performance time period. So still led by last year's leader, event-driven. With the decline in January, it's down to exactly 10% over that 13-month period, still topping the NASDAQ composite, which gained 9.6%. And you can see that we brought, with January gain, we brought macro up to almost 7.6%, 7.4% for the overall composite. Equity hedge 6.4. Obviously, that was much higher. That was the weakest area of performance because of all of the beta inherent in equity hedge strategies. That was 6.4 over the 13-month, and then just about 6% for the fixed income-based relative value arbitrage index. Inflation continues to be the story in financial markets right now, and it continues even into the first quarter of this year. You can see that was really the story last year. Most of that felt in the third and the fourth quarter. We saw strong gains in commodities. Commodities led performance throughout the year, and you can see looking at that 13-month period, you have a gain of 36.8% for the HFR 500 macro commodity index. Energy-based materials, also very commodity sensitive. This has gained 18.75%. We have nearly 16.5% in the event-driven distressed restructuring index, and a gain of 14.125% for the equity hedge multi-strategy index. Those are the top 4 areas of sub-strategy performance of 2021, and including the first month of January 2022. Those all well ahead of the gain of 9.6% for the NASDAQ composite. It really comes back to what I said earlier, where the strategies that are offering the highest degree of inflation protection have been the strongest performing over that 13-month period. A lot of great information on our website regarding the HFR 500 and great ways to understand both the composition of the index as well as the recent performance. If you're watching this video, you know that we do regular videos like this each month on our YouTube channel. We also have kind of an overview video that talks about the 500 construction and methodology, things like this. Please visit the website, www.hfr.com. There you can see index performance and you can see the methodology. One of the documents that I encourage you to look at very much so is when you go to the 500 webpage, click on the Investor Guidebook. That's a great resource that most institutions are looking at these days to understand the HFR 500 and how it works and what the methodology does to deliver those exposures. And as always, if you would like to, if you would like more information on any of these topics, feel free to reach out to me, Ken Heinz, directly. You can send an email to me or to indices at HFR or HFR 500 at HFR.com. Happy to arrange to speak with you and answer any questions you have about the HFR 500. Thanks. Speak next month.